Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on recent developments in the Nigerian financial market and our expectations. Last week, the National Bureau of Statistics published Nigeria's May 2021 inflation numbers. Inflation measures the increase in the price level of goods and services over a period of time. We track inflation because it affects the purchasing power of households, specifically in terms of the goods and services they can buy. Although low inflation is desirable, consumers have been facing high prices for goods and services since last year. There has been small respite since April as the speed at which consumer goods are rising slowed. This continued in May, with inflation falling to 17.9% year-on-year in May 2021 from 18.1% in April 2021. This reduction in inflation is attributed mainly to the slowdown in price increases as well as the high base effect, a statistical factor that shows that last year's trend still impacts current inflation. In the same vein, the food inflation rate moderated to 22.3% year-on-year, while core inflation rose to 13.2% year-on-year in May 2021. Overall, the inflation rate is still too high, and that means the spending of households will continue to buy less goods and services. We expect a sustained reduction in inflation if things stay normal, especially because we are approaching the harvest season. However, the extent of the moderation in inflation will be determined by the performance of crop harvests. There is also still a strong possibility that inflation may worsen. This will depend on whether the federal government will remove fuel and electricity subsidies and whether the exchange rate will remain stable. With the inflation rate still high and above the CBN's 6 to 9% target, investors are looking at what the CBN will do next regarding interest rates. When inflation is above the CBN's target, the expectation is a rise in interest rates, but the CBN has often deviated from this principle. We are not so optimistic of an increase anytime soon because inflation is starting to moderate, giving the CBN some comfort. For instance, this week, the CBN sold Treasury bills on behalf of the federal government at 2.5%, 3.5% and 9.4% interest rates for the 91, 182 and 364-day bills respectively. This is lower than the 9.6% rate given to investors in the previous sale. We think interest rate will remain low for some time. For more understanding on the Treasury bills market, please listen to the episode last week on understanding Treasury bills investment on the YouTube channel. On the FX market, the parallel market segment was volatile last week, with the dollar opening last week Monday at 505 naira to a dollar, but slowed to 485 naira to a dollar on Thursday due to CBN's announcement to increase dollar sales to the banks and the BDCs. However, it closed the week at 498 naira to a dollar. We expect the rate to settle between 485 naira to a dollar to about 490 naira to a dollar due to the CBN intervention, while we expect further depreciation at the NAFEX market, which is also the official market in the medium term. On the stock market, the NSE ASI, which measures the overall market's performance, declined by 1.3%, bringing the performance year-to-date loss to 4.3%. The market's weak performance has been due to the sharp rise in fixed income rates in the last few months. However, we expect investor sentiment to improve in the coming months with the reduction in rates. This will be further boosted by large positive half-year results and corporate actions. Interim dividend. Investors should target companies with a dividend yield which is calculated by full year dividend divided by the current market share price of 10% and above based on last year's dividend paid. Sectors to watch out for include the banking, cement, telecommunications, oil and gas, especially the upstream, and agriculture sectors. Overall, it will be best not to lose sight of the impact of inflation on your savings and investments. Hence, you should begin to invest across different asset classes based on your investment objective, investment time horizon, and risk appetite. You can listen to previous episodes on the various available investment options on the YouTube channel as a guide. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.